Okay, let's now have this interview with the president of this, actually these company here, Sandstorm Gold and Sandstorm Metal, Mr. Nolan Watson. Are you there, Mr. Watson?
I am. Thank you very much for having me on.
Thank you very much for being with us, and good afternoon to you. And pretty interesting, your business model.
Yeah, it is an exciting business model. It's something that we started up a number of years ago, I guess about 7 years ago now, at a previous company that I was working at called Silver Wheaton, which has grown to about a $13 billion market cap. And about 3 years ago, me and another gentleman started it up in gold and in base metals and in energy, and hence our two companies.
You look like a big distribution, money distribution machine. You look like a big ATM machine.
And that's exactly what we're trying to build. We're trying to build a company that just genuinely creates free cash flow for the shareholders, because we're in the mining industry, and the problem in the mining industry is that every time someone makes money at their mine, they have to spend it and reinvest it back into their mine just to keep their mine running and to keep finding new ore and to keep the mill working properly. Whereas at Sandstorm Gold and Sandstorm Metals and Energy, what we do is we buy a certain percentage of their production at a fixed price of, let's say in gold it might be around $400 an ounce, or in copper it might be 55 cents a pound. And every time we buy that percentage of production from them over the entire life of their asset, then we buy it at that price and sell it at the spot price. And the difference we get to keep, and we don't have to reinvest in the mine. So it becomes a free cash flow machine, like an ATM from a bunch of different mining sources.
Yeah, actually, it actually helps the company getting some operation money or some other maybe research and money, but they have to give away at a pretty cheap price, though.
Yeah, they do. Having said that, these transactions can be very, very good for the mining companies as well. A really good example of a deal we did a few years ago on the gold side of the business in Sandstorm Gold is there's a company called Silvercrest with a mine in Mexico. Silvercrest, their market valuation was only $13 million. That was the full size of the whole company. Mm-hmm. And they needed another $15 million from us to go build their mine, and they would have had to dilute their shareholders 100% to build that mine. Instead, they sold us about 20% of the gold that they produce for the life of the mine, and they have some silver as well, which we don't purchase. And so because we're only buying 20% of one of the metals that they produce, we gave them that $15 million. And so instead of having to dilute their shareholders 100%, they just have to sell 20% of their gold to us. So it was a lot better than their alternatives at that time. And having said that, we're now making about $10 million a year off of that contract. So we're making significant amounts of money, but they're also a lot better off than had they found the capital somewhere else.
In the case of a Silvercrest mine, it really helped their cause, because now the stock is sitting at its high ever at $2.50, which is not the case of all of the other company. But if I'm looking at it here, like you actually bought at $400 an ounce some gold from Luna Gold for $17 million, $20 million to Metanor at $500 per ounce, and $56 million at $500 per ounce to Black Fox Mining. And you know, so it seems to be an easy way for the company in order to get money for developing or producing. And actually, they only give away the first chunk of their production. That's what they do.
Yeah, absolutely. And another good example, and I think you mentioned it there, is we did a deal with a Quebec-based company called Metanor Resources, and they are in the process of putting a gold mine called Bachelor Lake into production, and hopefully they'll be in production here very, very shortly. And we gave them $20 million to go build the mine. and all we get is 20% of their gold, and they get the other 80%. So their shareholders get all of that 80% without having to dilute any of their equity shareholders. So I think it was a smart deal for them, and if they do a good job building the mine, which I think they will, it'll be a smart deal for us too. So it truly is a win-win business model.
Yeah, and I see that the company can also attack back with this other deal you got with the Black Fox Mine, where you landed the company $56.3 million for 12% at $500 per ounce. But I see that till 2013, if the company makes good profit, they could buy back half of the deal.
Yeah, in the Sandstorm Gold business, we have 7 contracts, and in 6 of them we're 100% locked into. That is the one where they get to repurchase half of the stream if they pay us $37 million, and they have to do it by the end of this year.
But you still make a profit from, because half would be 25, and at 13 you still make a good, well, maybe to 27, but you still make money at if they buy back this half.
Yeah, absolutely. We paid them $56 million. To buy back half, they have to pay us $37 million, and we've already made probably $6 or $7 million off of the contract. So by the end of this year, we would almost have already made 100% of our capital back, and we would still have half of the stream if they did buy it back. So even if they do, I think it's a very, very good situation for Sandstorm shareholders. And then we take that $37 million. We've got another $25 million of cash on the balance sheet now, and we've got a $50 million undrawn revolving line of credit that we can draw on at any time to make future acquisitions. So if they did, we'd have about $100 million at our disposal to go do new acquisitions. What
are the biggest criteria you're looking for in order to make a deal with a mining company?
Well, the key in the mining business, you have to have 2 things. And one is a good property that's going to have good gross margins, and it has to be simple. And the other is a good management team, because there are lots of times where you can have a really, really good property, but an inexperienced management team that wrecks the mine and loses a lot of investors a lot of money. And correspondingly, even if you have a good management team, if you've got a really poor asset, you're not going to make any money either. So in every situation where we try to make an investment, we're always looking for those 2 key things. And although we don't get it right 100% of the time, we do think we have developed a pretty good track record of finding good projects that are undervalued, but that are in the hands of good management teams.
And from those 2 listed company that you have already, which is Sandstorm and Sandstorm Metal, can you give us a comparison about in between the 2? You're probably much more active with the gold.
Yeah, so Sandstorm Gold is a company that we started up 3 years ago, and as you can tell by its name, Sandstorm Gold only focuses on these gold streams. So we've done 7 of them so far. We hope to do a number of them in the future and continue to grow that company. And because we started that company 3 years ago and started investing 3 years ago, a lot of those mines are already up and running and cash flowing for us now. So 5 of those 7 streams, we're making money on a daily and weekly basis off of those streams. Sandstorm Metals and Energy is our sister company, and we just started it up in the last year here. So that company focuses on the same business model, but in all commodities other than precious metals. So we've done some metallurgical coking coal, we've done some natural gas, we've done some oil, and more recently we've done our first copper stream here. And all of these assets are being pushed forward now into production, and hopefully 12 to 18 months from now we'll be getting a lot of cash flow from a lot of different commodities in that company.
And so it's like an open future that you have. Are you interested to look at any type of metal? Are you really looking at the rare earth metals right now?
We aren't looking at rare earth metals, although we are willing to look at a lot of different types of commodities. We're trying to focus and stick on main commodities that our investors can understand. So things like copper, things like zinc, things like natural gas and oil. And we're probably going to stay away from things like iridium and rare earth elements and niobium or anything that ends in ium.
Yeah, which has a little bit of difficulties. Are you ever looking at, thinking of doing something a little bit more aggressive on the oil sector?
We are. We're we've got a guy named Dan Gunderson who's a reservoir engineer, and he's a chartered financial analyst. And we've set him up with an office in Calgary, which is kind of oil and gas heartland in Canada. And his job is to go out and find us oil and gas deals. Right now, to be candid, I'm a contrarian, so I think although natural gas is probably going to be at very low prices for the next 2, maybe 3, maybe 4, maybe even 5 years, when we buy these streams, we buy them for the entire life of the asset. So we may be in a stream for 30 years or 40 years or 50 years. Mm-hmm. And so I think the next 4 years are going to show some good opportunities to buy some natural gas and let those properties mature over the next several years, and then hopefully in the long run we'll start making lots of money off those as well.
Some of the gas company will certainly be looking after some money in the years to come at the price the gas is at the moment, for sure.
Absolutely. Nobody's making any money right now, that's for sure.
No, certainly. So, Mr. Nolan, it was very interesting talking to you about that business model. Now, the last question I have is, do you see some business coming up with the Quebec government, Jean Charest, which is North Plan mining?
We're talking about that, actually. I was in London, England last week with a group of about 30 mining companies, and we're sitting around a table at a mining conference, and someone actually brought up what the Quebec government's doing there with their Northern Plan. And I made the comment that because of the Quebec government's attitude and that plan that they have instilled, that Quebec is probably the best jurisdiction in all of Canada to develop natural resource assets. And someone spoke up and corrected me and said, no, that's not true. That probably makes them the best place in the entire world to develop natural resource assets. And so we really do like Quebec. We think it's got a really good atmosphere for developing natural resource assets. We've done one deal there so far, and we'll be happy to do more deals and finance more Quebec-based companies in the future.
Okay, so if you're ever interested in iron, I know a place where we can find a lot right here in Quebec. There are many companies right now that are on this project. Mr. Watson, it was a pleasure having you with us.
Well, thank you. I appreciate it.
Thank you very much.
All right. Bye.
Bye. That's it for this interview.